While we're waiting for the rest of our attendees to join us, I'm going to go ahead and kick things off. My name is Shane. I run the events over at 10 Capital Network. We have a great investor reverse pitch for you today with Ansh and Bhanu from Brightside Partners. During the session, if at any point you have a question, please feel free to drop that in the chat box and we'll get to it when we can. Yeah, I'm going to go ahead and pass it over to our CEO, Hall Martin, to get everybody introduced.
Thanks, Shane, and I want to thank everybody for joining us today. We have a great presentation today. First, from the Brightside Venture Partners. We're going to hear about their investment thesis, how they came to it, and looking forward to your questions about that as well. And then after that, we'll have a presentation from Bentley Adams of Way as an example of a startup that is raising funding and that's in this space. So looking forward to both of those. And like I say, I appreciate any questions you guys have in the chat box, and I'll be asking questions as well. With that, let's go ahead and kick off. Ansh, if you could go ahead and take it away. Looking forward to your presentation on your investment thesis.
Absolutely. So I'm going to share, and Bhanu, you can take over.
Thanks, Ansh. I think before we get into sharing the exact presentation and walking everyone through the details and as well as the core philosophy that we have, I just wanted to kind of set the stage by sharing that, first of all, very excited to come and talk about our genesis and our thesis here. Startup ecosystem is something that is extremely critical to the innovation in any economy, and as we'll talk you guys through our philosophy and our genesis, you'll see that innovation is at the core of our investment philosophy and even our mandate and the glue that holds Brightside together. So I'll start with that. A quick rundown, like in terms of how we came together. All the prior partners in Brightside have some sort of a background as an entrepreneur before this stint. Like some people have been entrepreneur for a couple of times, different journeys, different experiences. But one thing that resonated very well with all of us was the common energy and openness to innovate, and a kind of a resonating theme with startups that they create a lot of value, but they also go through a lot of pain in this process, and which can be in some shape or form improved, as well as value can be added. So with that theme, we started our journey. Initially, we were working with very specifically with some companies, incubating them. So we were very hands down. Slowly and gradually, we started, as the volume picked up, we got like really good traction. We moved the format from incubator to accelerator, because obviously we cannot be so deep into each of the companies, and along this way we gradually kind of migrated towards a hybrid, which is now we are a focused accelerator. We look at the pain points and elevate those, and we are also a venture capital fund which is focusing on the early stage companies, I'll say MVP ready companies in North America. So Anshu, why don't we share some of the pages, and we'll talk over, and we'll kind of give a quick rundown in terms of what our philosophy is, what are the focus areas, and then I think we'll see if there are any questions, we can answer that. So as I was sharing, our philosophy has been influenced by a resonating theme with startups, and as I said, that they definitely feel a lot of pain points, and some of the startups fail as well. So as a core tenant, I think we at Brightside are focused on combating startup failure, and our journey has been such that we have a founder's mindset. Along with this, like while we are passionate about working with startups, we like innovation, we like the value that it's created in the economy through startups. We also believe that we have to generate returns for our investors, and returns which are in excess of a pure systematic return that they can get from anywhere, because that's what attracts a lot of investors towards venture capital. It's a high risk, high return game, but if you right size your risk, if you have good risk mitigation strategies, if startups start inculcating those very early in their ecosystem, working with accelerators or various VC funds, then I think risk can be decreased and alpha can be generated for the investors, which are LPs or VCs, I think likely for both of them. So next slide, Anshu. Very quickly, I'd like to share, like, this chart shows why most of the startups fail. So there are various reasons listed on the right, as you can see, with different probabilities and different weightages of startup failure. But if you club these together and look at two major themes, there are two themes that will very clearly emerge. One is lack of operational perspective or industry connections and partnership. So either a startup or an idea or the team that is working on that idea does not have the full operational perspective end to end, or does not have right industry connections to test things out. That becomes one of the reasons, apart from lack of funding, of course. And the second is the product and team evolution. So team dynamics and product journey has to be very synergistic. Like, so there has to be a strategic fit between what you're trying to do and what you're capable of doing, and what you need to do in the future as well, which becomes an important part. Next slide. How we add value in this journey is, I think, there are three core parameters, I'll say. As we looked at the last slide, we found that there are two reasons why startups fail, like two primary themes why startups fail. First is the lack of operational perspective, and then the product and team dynamics. We address these through three drivers. Like, first is, like, we are very operationally heavy. Like, our experience has been very deep into operations. So we have operators mindset. We have very good understanding of various industries, how startups and mid-sized companies evolve in those industries, specifically retail, finance, and healthcare. So we bring in our operational strength specifically on these industries. We have a CTO in residence who has, as a partner, who has decades of experience looking at various technologies and how they have evolved and how technologies can be leveraged to accelerate the startup journey. So we rely on technology convergence quite heavily. And last but not least, as I said, industry placement. And what do you mean by that? Yes, I think when you're looking for exit, industry placement is how you're going to partner with the right corporate player and look for an exit. But at the same time, it is also about getting the right ecosystem in place and testing your idea and expanding your idea and scaling your idea with the right inputs which help you operationalize it. So those are the three key drivers that we at Brightside leverage, both on our accelerator front as well as our as well as on the fund side. So next slide. I think this is very simple. I'll skip this. This is the product journey. You all are aware of the product journey. Different themes are required at different stages. This is all that we do at Brightside. We capture it through our technology convergence program. We look at the value proposition of the product. We look at its positioning. We look at how it is going to scale, what themes will be required at what stages, what capabilities teams have. So it's quite detailed from that perspective, more so on the accelerator side. But on the fund side, we test this. We make sure that the team or the startup has the right resources at right stages and their scaling journey looks reasonable. Next slide. This is how we are structured. As I said, we have a fund side and we have an accelerator side. On the fund side, it's myself and Ansh who kind of run it. I run it from fund and investment management perspective, and Ansh is responsible for the development of the fund and outreach and connection. So he's the face of the fund from that perspective. Then we have a dedicated accelerator side where we have a CTO in residence, and we have another technology guru. So among them, like, we are looking at decades of experience in scaling various startups, as well as working for various technology giants like Accenture, Cognizant, and whatnot. So they bring in deep tech and very focused product leadership into the mix. Yeah, next slide. So I'll focus a little bit more time on this slide because this is what kind of encapsulate and captures the crux of our thesis, and I'll just leave it at that. But let me spend and explain, because this touches upon our thesis. This touches upon our philosophy around innovation. This touches upon the basic concept of how startups influence the ecosystem. So if you look at like where we like to play, so there are two different universes here. You have incumbents, which are like foundational industries with supporting infrastructure that they work on, right? Like it can be big retail players, big healthcare companies, traditional banks, traditional payment providers. So those are the incumbents that usually are disrupted by upcoming innovation, which can be in the area of, like, as you can see on the page, there are a few we focus on, like artificial intelligence, IoT, digital wallets, blockchain, mobility, cloud. So all these disruptive technology in quite a large, to a quite a large extent, are absorbed by incumbents as well. Big companies like Ford, GM, Walmart, they are all absorbing these technologies left, right, and center. They have big teams who are absorbing them. Where we see value, or where we see Brightside contributing and playing, and as well as a lot happening in the industries, when this innovation overlaps with the incumbents and the areas which are not, I'll say, at the core philosophy or core focus areas for big companies, or they don't have enough bandwidth, or they don't have enough foresight or insights or ideas to develop those things, or using these technologies and develop and mature those things. That is where a very well leveraged disruptive or innovative idea with a well placed MVP, scaled to a decent extent, can come into the picture and completely influence the dynamic. Along the journey, like any startup which will originate from the right hand side on this chart, move towards somewhere in the middle, and gradually get either absorbed into the incumbents or develop into a big company on its own and have a public exit, like Klarna, Teladoc. All these examples that you are seeing, these are all examples where the journey has been such that they originated as a disruptive idea, in some shape or form worked with the ecosystem and placed themselves very well in the industry, developed good partnerships, and then scaled or exited or kind of developed long-lasting partnerships and relationships with the incumbents. And this is so in nutshell, like what we do is, like, what we are trying to do here is we are trying to accelerate this journey. Once someone has a good idea, a disruptive idea, innovative idea, we want to test out the feasibility, and we want to bring in the operational perspective so that that idea goes far and long into making inroads into the incumbent ecosystems, right? We want to make sure that the operationalization of the idea and the requirements from operationalization are already captured when we are thinking about the value proposition, when we are thinking about product design, when we are thinking about scaling very early at seed stage and Series A stage. Things that are obviously going to come in the later stages, but you're prepared for them much well in advance, and you're testing and developing those completely, if not completely, but to a large extent, removing the root causes of failure down the line. And we want to do all this in a way that is obviously sustainable and have core tenets of ESG in it, because that is something that is very close to our heart philosophically. And we think that whatever new designs, new concepts, innovation has to happen in a way that is friendly for this planet, and then that does not disrupt things in a negative way, but definitely does so in a positive way. So I'll just leave it at that. And Anshu, if you like to share a few comments on our journey, and Anshu is usually close to the startup, so he can give us a perspective there. And I think, but I hope this was helpful in terms of giving you a perspective of our core philosophy, our thesis, as well as our focus areas.
Absolutely. Thank you, Bhanu. I think that was great. In terms of our journey, I think you kind of already touched about few things about Genesis and whatnot. But again, just to kind of highlight it a little bit more, right? Our journey is definitely at this point, like we have our, materials and fund model and whatnot ready. We are at this point, like doing some outreach across North America, specifically to raise, what we are looking for. But at the same time, we are also targeting the right LPs who kind of synergize with our thesis and whatnot. So that is our, I think, journey where it's kind of very heavily towards the outreach, and then eventually, once we, capture some capital, we will start doing the fund management of it. So, but again, I think that's where where we are and where we are heading. But Bhanu, I think, is there anything specific you wanted me to highlight, or?
No, I think that's helpful. I think we can definitely take more questions, but just to kind of round it up, and you mentioned a very good point in terms of our stage and focus areas. So our accelerator has been established. The structure very soon is going to go live, and a lot of it is already there. You can always reach out to us and talk to us. We can share more, but it will be available on our website. You can always reach out to one of our partners. On the fund side, we have the thesis that I shared with you is the same thesis that is right now we are making inroads into various sectors of LP community, and people are absorbing it and committing capital. We want to raise a sizable fund with which we can support both our not only our fund but also the accelerator journey. So we can start working with startups very early in their life cycle, because that will be our forte. Like, we like to start and build those relationships early, right at the time when you are kind of MVP ready, and take it from there, so that we can have this long and fruitful journey. So stay tuned for more from us in terms of how we are progressing. But our accelerator is on. Our model is structured in a way that the intake, 50% of our intake into the fund is through accelerator. So I really encourage everyone to participate and reach out for the accelerator program. And it's very focused. It's not time consuming, and it's not also a mass acceleration program where you just get some like predefined ways of doing things. It's more focus is more on each individual startup.
Great, Bhanu. Thanks, Ansh. Appreciate that. I had a few questions to kick things off, and if those in the audience have questions, please put them in the chat. My first question is, do you have a specific sector, stage, or revenue requirement to come into your accelerator or your fund? Where's the threshold that someone can look at and say, yep, I'm a fitting, or no, I'm not?
No, I think that's a very good question. So sector focus, sector, as I said, like any good idea that is disrupting retail, healthcare, or finance space, more specifically payments, in that broad area. Like, I think we call it foundational industries, and by that what we mean is anything that is used and leveraged by people on a day-to-day basis. People spend most of their money on these services and areas. So simplistically put, if like industry classification is something that's always boxes things, so I'll just simply put it is most of the industries that you use on, or technologies that you use on a day-to-day basis. Any idea that disrupts that or improves that is our focus area. Around that overlap that I was talking to you when we looked at the Venn diagram, that will be our focus area. In terms of any minimum threshold, yes, for the fund, it has to be seed. It does not start at pre-seed for us. But if you are pre-seed, then the right opportunity or the right area of collaboration in our mind would be accelerator. So anything before seed goes through our accelerator program, and 50% of our fund we are planning to fill through our accelerator program only. So if that helps.
Do they have to have revenue to get in?
Sorry?
Does the startup need revenue to join your accelerator or your fund?
No, our early stage fund focus, as I said, is from seed, is around seed and Series A. So if you are Series A, there is some sort of a paths to monetization that you need to have, but you don't necessarily need to have dollars on your P&L at the top line. But yeah, you need to have a decent enough paths to monetization. If not, the monetization has already started.
And how many companies are in your portfolio now for the fund since the beginning?
So we have been working with like 3 or 4 companies as of now. And it has been just, I think, last 6 months where we have kind of launched both the fund and accelerator, not completely. So some have been incubated, some have been accelerated, and few companies have gone on and progressed to the next rounds, and they have raised more capital. But the focus area has been the same industry group that I have been talking to you.
Great. So in the foundational industries, it sounds like that's quite a broad range there. A lot of people could come in. What about consumer-facing deals?
Yeah, I think these are all consumer-facing deals. It can be B2B, it can be B2C. That, like, the point is where we narrow it down. If I may kind of expand on that a little bit, I know it sounds like it's a very broad area, very broad thesis. But if you look at the industries that we are touching upon or we are looking at, then it is quite a broad area. But if you look at the technologies that we are targeting, which will disrupt these industries, that's where we narrow it down. And that's where I think we need to kind of focus on. It has to be like anything related to AI, cloud computing. If you're using blockchain to disrupt anything or innovate, those are the areas that we typically like to focus on.
Great. And so you're raising funding now. What's the current raise that you're doing to take the fund to the next level?
So we are looking at anywhere between the minimum that we are looking to close the fund is 15 million, which also covers some sort of I'll say ammo for our accelerator, which is a very important cog in the wheel in our strategy, as I have been mentioning again and again. So that's where we are headed towards.
Great. And then where do you think value is going to accrue in these foundational industries? Do you have a specific thought about where you look to say this is the place we're going to be that may not be well known or commonly accepted? Do you have any insight into where you want to look for these deals?
So in my mind, I think value in this industry would be to a large extent will be created in consumer satisfaction, right? Consumer ease. So anything that makes it easy for the consumers at the end of the day is what is going to create value, and where your paths to monetization will be easier, as well as you'll have some sort of reception from the incumbents, which will make your exit easier. So any startup that is geared towards that or has those sort of I'll say green shoots, that it's extremely good, and that is something that is very much aligned or very much in sync with what we have been doing and seeing. So we like to work on that space quite heavily. Another aspect is if you can grow the size of the pie, like if there's anything which can help incumbents expand their market reach or their scope and increase the value of the size of the pie, that those are another areas that can be touched upon.
So what are some ways you can expand the market for them? Are you expanding their product line, or are you expanding their actual distribution or social media reach? What techniques are we thinking about there?
So I think it's up to startups, right? I think depending on their technology and their idea, like what they're targeting. But if you ask me, like how it can be done, there are various areas, right? Like I think if you look at I'll give you an example of pharmacy. Like in Canada, in some provinces, pharmacies used to just provide fill prescriptions. That used to be the mandate, and that's what they were supposed to do. Looking at the healthcare needs and in the theme of creating convenience for the customer, as I was mentioning, governments are also getting very receptive, and they are expanding the mandate of pharmacists now. So a lot of companies are coming up with solution with which you can have virtual healthcare solutions delivered from pharmacist. At the same time, you are kind of connecting that with your healthcare provider, and this whole needs to be connected to the EMR system. So if you think about it, I think it's in essence it is various kind of subsets of care and service and delivery, but at the end of the day, customer needs everything on his phone, like similar to Instacart. Like if in their mind they don't want to differentiate between who is providing service and who needs to be updated. They want to get the healthcare, or the aspiration should be to get the healthcare very similar to the way they are getting their grocery delivered today. So, and it's a fair assumption or fair ask, I'll say. But are there solutions in that space where companies are growing their either growing their product lines or their service offering in a way that meets the need of the consumer and or the convenience requirement? Yes, I think there are some, but there's a lot of opportunity there also.
You lead deals, follow deals, or do both?
We lead deals in the seed stage. We follow deals on the Series A.
Okay. And do you have a maximum valuation that you won't go above for a seed deal?
No, I think it's not maximum and min. I'll not categorize it in that format. Like, but yeah, we do have a threshold. We do have a range in terms of how many seed investments we are looking to do. So the fund that we are working on and will be deploying looks at around 10 seed deals every year approximately.
Okay. Great. So how do you find deals? What's your source or your competitive advantage to find the better deals out there? What can you talk about on that front?
So in terms of finding deals, I think that there's always, like, I think LinkedIn and social media has been a great enabler. Apart from that, we have tie-ups with various mass accelerator programs as well. So if you look at Y Combinator and like various other accelerator programs, we have tie-ups with them. Like if they see any fit where a particular startup will benefit by partnering with us, so we initiate those discussions that way. And I think Anshu can expand a little bit more on that. Like he's the face in terms of outreach, both on the fund side and even I think in the deal pipeline side.
Yeah. So yeah, just to add on that, I think we do have some partnership all across, like within this geography, and again, it's a very kind of a it's a lot of people are throwing deals. I mean nowadays, like when everybody wants to be a founder or a startup creator, like they are also approaching me, and not only from organization, individuals as well come to me. So again, it's a very careful analysis that we have to do, I think, very upfront. But again, it's not only organization, it's not only individuals, I think, but we are also tying up with some organizations which I see are holding some of the startups not hostage, but like they are capturing them very early, and then they are tying up with us as well. So there is some stage gates within this process. Either sometimes this good deals come to you directly, or your partnership have some good deals. So it's a cloud of different founders all across. And then what these accelerators or incubators are doing, that they are kind of ahead of this VC firms, that they are already identifying and capturing these. And then when the funding time comes, they kind of reach out to us. And then we have to do some due diligence from our side as well. Like, okay, if this startup makes sense and it aligns with our thesis, and is it investable and whatnot. So yeah, it's a kind of very there is no specific answer to that, Mr. Hall, but yeah, I think it's a there has to be continuous vetting all across that we do with our
Great.
partners and non-partners. Yeah.
Very good. If there are questions from the audience, please put that in the chat box. Otherwise, if you have any final words to say, Bhanu or Ansh, we'd love to hear anything else we haven't covered yet.
No, I think, as I said, like it was very exciting, very excited to connect with all the startups and as well as 10 Capital Network. The only closing comment that I'll have is, as I said, it's extremely important. We are not we are not in the game of a mass acceleration. So like it's always good to connect and talk.
Great. Well, I'd like to
Yep.
invite Bentley Adams to come up, if he could turn on the view and put the slides up. He's in the consumer health space. I think that fits your thesis there, Ansh and Bhanu, and looking forward to your thoughts here at the end of the presentation. Bentley, go ahead and tell us more about Way and kick it off from there.
Yeah, thanks all. Always great to connect, and thanks for having us here today. So the way I think is best to lead off, almost always, I find it best to give a little background about myself before getting into Way and kind of how the observation came to get where we are and what the product is. So the story really starts when I was in college. A professor of mine told me that 2/3 of people in this country were going to live a life of pain and suffering due to preventable chronic conditions. And that just stopped me dead in my tracks. I'm an Eagle Scout. I took an oath to do a duty to this country at a young age. As sappy as that might sound, or as messy as things are like they are right now, I always took that very seriously. So I knew since then what I wanted to do with my professional life is to impact health. And so my first love actually was in body movement and functional movement, helping people move in alignment with their natural structures and seeing how when they did, they would report back and say how they were happier, they were better to their spouse, their partner, their friends, their coworkers, the strangers on the street. And so that gave me a deep sense of reward. And I had wanted to be a doctor. My mentor was a doctor in college. He was an Olympic athlete trainer as well. And he said, don't do it. It's not what you think it's going to be. You're going to have to care for people the way that the system wants you to, not the way that you want to. And so naively thinking I'd figure out how to work the healthcare system from the business side and make change there, I went to KPMG and I audited Medicaid for the state of California, and then went to Beckman Coulter and ended up being, at a really young age, a top producer for them and #1 in the US, and ran the whole New York area and their hospital-based lab business. And lab is super important because it touches every area of the healthcare system. And so basically from there, though, I learned that realized that corporate healthcare was probably not going to be how we were going to make significant change and impact. And so I went to, of all things, my neighbor at the time was a principal at a venture capital firm called Accretive that was riding very high, and they had created Fandango and this other company called Accretive Health, which at the time was one of only 36 companies in the world that was privately held and worth more than $1 billion. And I basically helped take that same model and put it into laboratory with them. And so the company grew super fast. And then, but then, ultimately exited to private equity, then went to build the next thing, actually before it had even exited. And that was actually more closely focused on delivering value to consumers in their daily lives and impacting health that way. And so it was a digital marketing agency that was focused on the consumerization of healthcare and getting products and services to people quicker and more efficiently. It was an Inc. 500 company, but it didn't make a dent. And so I came back to, in impacting health, that is. So I came back to this observation that I had, and known, something that I had known kind of bedrock since from studying the human body all the way back into college, which is that nutrition is the single biggest factor to each person's overall health. And that's not really debated by pretty much every scientist, doctor, dietitian, trainer, anyone who studies the human body. And so the question is just what to do. And so there was something that my mentor had taught me when we talk about functional movement patterns and shifting behavior. One of the most important things, if not the most important thing, is to make sure that creating emotional rapport and trust with the client, but ultimately that you can't tell somebody what to do and have the shift that they make be long lasting. You can tell somebody what to do and maybe the shift will last for 3 months or 6 months or 12 months. But to make long lasting shift, you really have to create that safety, create that trust, and help somebody make their own decisions and have agency over their decisions. And when that happens, the change lasts for a long time. And so for me, creating with clients out on the side of my corporate and venture life, I was a trainer at Equinox in New York, and I had this observation while working with clients. But in order to create that safety, that trust, and create effectively mirroring for the neuromuscular pattern so that they could make those decisions themselves, I would just start really simply. And it sounds really, really funny, but I'd say, hey, you'll bring a client in, you'll say, hey, Bhanu, how was your day? What did you do? How was the stress? How was, how are the clients? How are your portfolio companies? How's the guy Bentley? Was he being a jerk? Blah, blah, blah. And then I'd ask, what did you eat for lunch? And invariably, three things would happen. The client would become aware of what they ate when they wouldn't have otherwise. Two, they immediately knew whether what they ate was good or not good for them. And we could talk about those labels. And three, by 5, 6, or 7 o'clock at night, or the next day when I'd see them, they knew how their body felt as a result of what they ate. And so they already had all the information. They just needed to become aware of it. And so I would write it down. They'd start getting more curious about it. And I'd focus on the functional movement patterns, and we'd see these major shifts happening. And so about 6 years later, when I was starting down this path, I call up those old clients, and over 80% of them 6 years later had kept that shift. And that's a very high number of success long-term. And so I thought that observation was the core of it, is that awareness that they were getting and and making those own decisions themselves was really the core of the change. And so working with intuitive eating dietitians, or starting this process, we started working with intuitive eating dietitians, and we have about 3,000 of them in our network. And talking to some of the best ones in the US, they have the same core observation as the basis for their practice. And so that's where not only do in the field experts really have this, but also have the same observation, but as well as some of the best behavior scientists from Duke University and Columbia University as well, who are advisors of ours now. And so the question is, how do we put this into a digital experience? And what we've basically created is an intuitive eating app that works within the cognitive behavioral therapy format, but that's really what Way is. And so I'm going to dive into kind of what the nuts and bolts of what Way does and what it is. But that's me and kind of how we got here, and where the observation for the product really came from. And so the way I say it from a problem standpoint is that the core problem is that restrictive diets fail. 83% of restrictive diets fail. And that means that over 120 million Americans are failing on a diet every year. So about 49% of the US adult population is on a diet or weight loss program in a given year. And over 100 million of them are failing because 83% of those diets fail. So it's a massive problem that we have. And what Way is really doing, and really kind of, if you look at what's happening with a lot of the consumers, the problem is that they're still looking for change, but they're just met with really inadequate solutions that are based upon restrictive formats and restrictive diet formats that have a high failure rate. And so there are very suboptimal choices that they have. And so what Way is doing is reinventing this process by, again, incorporating intuitive eating with behavior science, and really driving the kind of shift with the relationship with food and the body that people need to have long term. And so it's important to discuss really upfront what Way is and what it's not. So what Way is, it's first and foremost a safe and non-judgmental space. This is key because when we think of making any sort of change, doing it in a sympathetic nervous system is very difficult. We want to make sure people are in a calm parasympathetic nervous system state when they're going through making change. As well, what Way is it's accessible from a cost standpoint. We want to make sure that it's really easy for people to be able to afford access to it. And then we also, what Way is, it's using proven efficacy, not just within intuitive eating, which has 150 clinical studies, but also the CBT, or cognitive behavioral therapy framework, which is the bedrock of our understanding of mental health and behavior change. And so what it's not is, it's not creating shame or shame-oriented cycles, and it's not creating or triggering the restrict binge cycle. So the reason why restrictive diets fail is people can't follow them, but that restriction, one of the main reasons why is that restriction creates deprivation, and that depriving the body of what it's actually asking for is disconnecting the person from the body's internal cues. And when that happens, it's just a matter of time before they flip into a binge eating episode. And when they get into a binge eating episode, then they're going to get into, most likely, almost invariably, it flips into shame or guilt. That shame or guilt then causes more restriction. And then they just keep going through this cycle over and over and over again and never get out of it. And so that's what we are not. We don't have anything that looks, smells, or feels like a restrictive diet for that exact reason. So what Way is, in the way that it works, they begin the journey really by going through 3 different pathways. There are 54 core modules based upon the intuitive eating substance and going through the cognitive behavioral therapy framework. They're 2 to 8 minutes long. And then the central theme within Way, which is a miracle or magic wand question that's used in dialectic behavioral therapy, as well as in addiction therapy, which is basically imagine finding peace in your relationship with food in your body. What would that feel like? What would that look like? What would you notice in your surroundings? What would you be eating? And how would you feel about your body, right? And so when that picture is in a person's mind, the thoughts and emotions and feelings map towards that, and that's the behaviors start following. And that's why Whey has had a 73% success rate amongst users within the first week, which most apps struggle to get to 10% success ever. So as we move forward, what we're focused on is creating a product that has extends user lifetime through and helping them, ultimately serving them in all seasons of their life and with their relationship with food in their body using generative AI. And so we'll actually start implementing that later this year and early next, and really helping people uncover those thoughts and emotions and feelings behind their behaviors. We have an amazing team. I think that's actually one of our strongest points. We have not only Kara Harpstreet, who's one of the intuitive eating thought leaders nationally in the US, Kasim Bufelaga, who's our back-end engineer, who's built the original code and has a very deep experience at all levels of company lifecycle, as well as Luke, who's an excellent front-end engineer who comes to us from Square and had been at Athena Health before, and Frank Bach, actually one of the highest profile designers that you can find in the US. He's the principal product designer for Headspace, as well as Chelsea Chandler, our head of social, who's not just the head of social, she's a dietitian herself with an MPH. And I'll also just kind of highlight at the bottom, there are two advisors who are Marta Chasador and Julie Miller. One's a quadruple board certified psychiatrist at Columbia, and the other is one of the key clinical psychologists and behavior scientists at Dan Ariely's School of Advanced Hindsight at Duke, which is one of the best in the country for behavior change and economics. From the investor side, we've been funded. We have now two funds. We just closed our second last week. Sonoran Founders Fund was our leading fund. And Esther Dyson is probably our most high-profile angel, is one of the more high-profile angels of the last 20 or 30 years. From a traction standpoint, it's important to note that when we launched, we weren't focused on volume growth. We were focused on the quality in the consumer market, the quality of retention and unit economics around acquisition. And so we were able to improve both of those very significantly. Since we launched, we went from about a 45% retention rate up to a 78% month-over-month retention rate, which is extremely high. One of our product advisors was formerly the head of product at MyFitnessPal, and originally saw this and thought it was astronomical, it was the word that he said. And so having seen all the different apps that exist, so now we're just trying to scale that as we scale out the app. As well, I'll point out that we were able to reduce our acquisition costs by about 82%. So we started at $57.96 when we launched last April, and now we're already down to about $10.19 from our CAC with our CAC. And so as noted at the bottom right there, you'll see we're focused on with the next scaling phase that we're in right now, that we want to get to an 87.5% gross margin, up from 55.8 where we are currently. And so we're raising $1.15 million. We've already raised $920,000 of that. It's predominantly to go to distribution and to just continue moving forward with the team that we have, evolving the product. And we believe it will get us to about 20,800 customers, about $145,000 in MRR, and about 1.7 million in ARR. So with that, say thank you and leave it to any questions.
Yes, thanks, Bentley. If anybody in the audience has questions, go ahead and put them in the chat box. Ansh, what are your thoughts there so far?
Yeah. So first of all, Bentley, I think great. Presentation, and this, idea is great. But some of the things, like, I kind of thought, like, have you done market sizing of this, like Sam, Tom, and Som?
Yeah, for sure. The TAM
Maybe I
is
missed the slide. Sorry.
no. So the TAM depends on how you look at it. I believe we have one in here. So the TAM is very big. It depends if you look at it from a health and wellness angle or from a diet and weight loss angle. And so we're not in the diet or weight loss industry. It's a very noisy industry, but we pull customers for that. That's why we wanted to focus on acquisition cost so much. But the health and wellness angle, so the diet and weight loss industry is about a $72 billion a year industry in the United States alone. The health and wellness industry is significantly larger, and this is where what Whey does is not diet and weight loss, but it pulls people from there, as well as people who are interested in wellness generally. And I think as we were talking about with Hall recently, it's a quality of life. I think there's a big consumer push towards that. But yeah, the SAM actually is very specific. We have done several questions in our marketing funnels with statistically relevant ends of population sizes. The first funnel was actually asking people the question, have you done a diet in the last year and had some success, but then it later fell off? And 21.3% of people said yes to that, but they were still trying. And so if we apply that to the 121 million, or to the 246 million adults in the US, we get about 121 million Americans who are actually still looking for something. Now, the question that we had on the next set of marketing funnels, which was, it was a set of 3 questions to test the intensity of how are people rejecting restrictive diets in their decision-making. And so the 3 questions that we asked were, how much do you agree with the statement, diets are horrible and a waste of energy? I'm done with restrictive diets. Very much agree, some would agree, don't agree at all. And actually, 48.8% of people said very much agree in the first funnel. And then that second question that we asked was, how much do you agree with the statement, I refuse to use weight as a measure of my health/life? Very much agree, some would agree, don't agree at all. And actually, surprisingly to us, was that 42.2% of people said somewhat agree, and the next biggest category was don't agree at all. And so the idea is that the third, well, getting to the third question is within the trans theoretical model of behavior change, how many people are in action mode? So the third question was, how much do you agree with the statement, I'm ready to explore something different because diets have failed me so much? Very much agree, some would agree, don't agree at all. And in our first cohort, 53.6% of people said very much agree to that. And our most recent cohort, 75% of people said very much agree with that. And so we apply that 53.6% to, or the 75% in that range, to the 121 million Americans who are already in that active diet seeking mentality, and have had some success and are looking for more of it. We get between 13.8 million and 19.3 million potential consumers. And so that's our SAM. That's really kind of how we get down to exactly how many people do we believe are rejecting restrictive diets right now in the United States, and they're totally open to something, especially that it's less than $10 a month. And that's where we fit at $6.99 a month. That's where Way fits as the solution for them. And so they don't really have much out there. New markets as a stop dieting, non-diet approach, but anybody who's close to them, especially the professionals like dietitians and mental health experts, know that there are green, yellow, red system underneath, which effectively makes them a restrictive diet. So there's not really a solution for the group of people that we're going after, and that we'd like to serve. But that's really kind of how we divide up the TAM and the SAM. So the TAM, very big TAMs. The SAM is actually very significant. Depends on how you measure it. We've quantified it as high as about $1 billion of revenue potential every year. But that's a very conservative look at that, I think.
So other things that I see is like you have founded since 2020. So I mean, it's been I think 3 years, right? I think so you guys are already kind of, there is some traction, like some kind of cash flow going on, or how is your journey look like? Did you raise already some capital for this?
Yeah. So we've already raised 920,000 of the $1.15 million round that we have under our note. And so we've been doing it through funding. We launched last April. We had done about 10 months between when we raised the first bit of capital under this for Way, and then gone through a design sprint, went through beta, and then launched last April. So we wanted to make sure we really had things figured out on the product side before we went to launch. And I think that we did, and we've learned a lot, and then also to adjust it since we've launched. And so now is where we're kind of stepping on the gas, and that's what the rest of the funding and the round is used for.
And the Series A, what is the use of funds looking like for you? Looks like you guys you have some customers acquired, you are making some money. So why you need the additional capital for?
Yeah, so the push is to get to the capital is to get to cash flow positive, because in order to be able to spend enough to acquire enough customers to get to that break even threshold, that's the predominant use of capital. Yeah.
So marketing and all those initiatives probably you might require, right, to acquire more customers and maybe expand the product. I mean, right? Is that
exactly? Yeah, evolve the product a bit. There are a couple of things on our product roadmap that will be getting done So you can see version 2.5. We just released 2.0 last month. 2.5 is going to have significant progression for us, but obviously we're going to have to raise even more getting into the machine learning element that we're looking to in version 3.0 and version 4.0.
And for the Series A, how much, is there any commitment yet, or what is your state at this point?
Yeah, so we're raising a $1.15 million round. We've closed already 920,000 of that. So that's already come in. We've done it in tranches. So we've done it over $250,000 plus tranches. And we just actually raised last week from another VC who put in 120,000. And yeah, and so we have about 450,000 of interest left, but we're moving that from interest to commitment over the coming weeks. And yeah, that's kind of where we're at with the raise.
Just one last question, Bentley, from my side is, so I see, I mean, you are in California, area, right? And there are a lot of wellness companies like yourself, like competitors. You might have done some competitor analysis as well. So there are some companies already, some big players are already there. So do you think your exit strategy is to get acquired, or you are thinking to hit IPO? Have you thought about it slightly?
Yeah, I mean, I think there are 3 different potential exit options that we're looking at downstream. And so obviously, I think first and foremost, it could be a strategic acquisition from, there are several different players, and we can go down the line from who those could be. It could be exit into private equity. We've seen that happen in the space a couple of times. MyFitnessPal was purchased off from Under Armour by Francisco Partners, most notably in the last few years. But then obviously too, the long path, which I don't think is the likely one, is the path of going all the way to IPO. If it happens, that's fantastic. We're shooting for that from making the sound business practices and brand that we want. We want to ultimately get to cash flow positivity as quickly as we can so that we can control our own destiny much more and have a higher opportunity to get to that point. I do believe the market would sustain a public company in the niche that we do, because even though there are a lot of health and wellness companies in LA, for example, none of them do what we do. And they've all tried. Headspace has tried, Calm has tried, everybody's tried, but they can't do it successfully. It's very difficult unless you have a brand that does exactly what we do, the way that we do it, and builds trust with the consumer market as such. And so I think that the market itself, the size of it, would allow us to go to IPO if we wanted to. But those are the 3 exit opportunities that we can see.
Thank you. Thank you so much, Bentley. Over to you.
Yeah, thanks for the questions. Yeah, appreciate it.
Great. Thank you, Ansh. Are there any questions from the audience? Go ahead and type them in now. Otherwise, we'll be wrapping up here shortly. Bentley, any final words you have to say about your fundraise and next steps for you with this deal?
No, that's it. Thank you for the time, Paul, and just happy to have any conversations. Just send me a note and would love to connect.
Great. With that, let's go ahead and wrap it up for today. I want to thank everybody for the presentation. Ansh, Bhanu, for your presentation on the fund, and Bentley for your presentation on Way. We'll be recording this and sharing that back out with everybody who registered, and also with investors interested in what Ansh is doing. So with that, thank you guys for joining in the audience, and looking forward to seeing you guys next time. It was a great event, and looking forward to next steps. With that, you guys have a good one.
Thanks.
Thank you
as well.